US oil spot. And in fact, since the beginning of this week, we've done very, very well on this asset. As you all remember that at the beginning of the week, we were doing more of buying this asset as we were able to scoop in over 240 pips during the first half of the week. And during yesterday's trading session, we anticipated some selling moves, which of course has also given us significant amount of profits on this one. So for the sake of those who missed out on our earlier session, let's go through how the week started for us and what led to the decisions we made. So at the beginning of the week on the US oil spot, we did notice that price action was initially confined within the range of the $76.75 level and the $76.35 area to emphasize the level of indecision going on in the market at that point in time. And in addition to the range we have here was the ascending trend line we also spotted, which captured all the higher lows since last week Wednesday, as you will see here. And for the fact that price action was above the ascending trend line, you know, when we have ascending trend lines and price remains above them, we want to be looking out for patterns and structures that support the idea of buying that asset. And with this in mind, we positioned ourselves above the resistant line at the $76.75 area to capitalize on the first buy position for the week. And I did mention here on Monday that for those of us who missed out on this opportunity, that we should be looking forward to the breakout of the $77.50 area to add more positions. And we of course had more levels at the $78.43 area and of course the $78.63 area as we rode that bullish momentum all the way into the $79.50 level before the bearish momentum began in this market, taking us out of all the buy position. And of course, you know how we do it in this community. We move our stop losses and secure the current buy position. So in that regard, we must have been taken out with a reasonable amount of profit. Now, during our live session yesterday, we begin to notice that despite the strong bullish momentum that started this week, that there are chances that sellers could come in to this market. And one of the things we saw here that made us to start considering a selling opportunity, maybe in the short-term perspective, was the appearance of a reversal pattern in the form of a head and shoulder pattern. Now, we saw after the impulsive move that started this week, we saw our price action transition into the left shoulder. Then we saw the head, and then price action came back into the $78 area, transitioning into the right shoulder, and we had a beautiful head and shoulder pattern. And of course, you know how we do it in this community. Whenever we identify such reversal setups, the next thing we want to be doing is to mark out the neckline of that reversal pattern, which interestingly lines up with that $78 area. And one of the things we were looking out for was the breakdown to validate the reversal pattern, and we saw the retest of structure, and since that moment price action nosedive to the downside, giving us multiple entries. As you will remember, yesterday we said a breakdown of the $77.50 area will welcome more selling opportunities, and a further breakdown of the $76.75 level will be welcoming more sell positions. And in fact, on that sell positions we had yesterday, we were able to accumulate over 350 pips. And at this point in time, if you had moved your stop losses accordingly, you must have been taken out of all the sell positions at this point in time. So well done, and kudos to everyone who are taking advantage of this opportunity. Now, what are our plans as we get prepared for today's trading session, and what are we going to be thinking of? Are we going to continue selling, or are there chances that buyers can come in anytime soon? Well, if we look at the structure, basically we saw what happened during the Asian session as we saw price dropped into the $76 area, and throughout the Asian session, at no point in time did we see price break down that area. So could this be an opportunity to start buying, or are we likely going to be seeing a breakthrough of the $76 level to incite a sell-off? Now, before I go into the details on the higher time frame, I want to share with you the fundamental factors behind the scenes that are likely going to be driving the sentiment in this market. Now, yesterday we witnessed a strong sell move, which can be attributed to the increase in U.S. crude stockpiles, which surged to 3.6 million barrels as against the previous one at 0.774 million, significantly surpassing the expected 1.793 million. Moreover, indications of reduced oil demand in China has further contributed to the prevailing pessimism surrounding oil prices going forward. Given the circumstances, the likelihood of a further downward movement is very, very likely. However, if we take into consideration the pledges made by the Saudis and the Russians about a couple of days ago as regards to cutting oil production by 1.2 million barrels per day, this could artificially increase the demand in oil. So now let's go into the daily time frame here. Let's look at things from an holistic standpoint to see how we intend to position ourselves for the next move. Now, to do this, we will scale up into the daily time frame, as this was where we started our analysis for this week. Now, on the daily time frame, this is what we saw at the beginning of the week. We had a couple of levels on this chart, which we said we will be using to guide our trading decisions. Now, the first one here is the $75 area, which was duly marked after considering the nature of price action since the month of July. And one prominent thing about the $75 area is how it had been a strong buying niche since price climbed above the structure, and the attempt by sellers to break through here despite the strong bearish momentum from last week's trading session was duly negated by the buyers, as we saw buy pressure resume around that area. So the $75 level is considered to be a demand zone based on what we are seeing here. Then the other one we have here is the $80 area, which is serving as the key level of this current market condition. And of course, we saw how price action did break down the $80 level during the last week's trading session. And from a technical standpoint, we do expect that price may come back, retest the structure to incite a downtrend move. However, it is not all the time that price action does this, as it could still incite a reversal pattern. As you will see here, if price is unable to break through the previous low at the $75 area and along the line forms a higher low, then we might likely be seeing a reversal setup, maybe in the form of a double bottom structure to incite an uptrend move. Now, with the information we have gathered here on the daily time frame, it's quite clear that we are at a crucial juncture in this market where we need to understand the psychology behind the price movement around this area. Now, for us to have a better perspective into what is going on here, we will need to scale down into a lower time frame. Now, on the 4 hours time frame, we had a beautiful structure here after considering the nature of price action in the last 3 to 4 weeks. Now, the first thing you will observe here is the descending trend line. Of course, you will see price had consistently found lower highs, leading to the breakdown of that $80 area. Now, something interesting happened during last week's trading session, as we saw here that as soon as price got into that $75 area, we begin to notice buy pressure resume around this area. If we take a further dissection of the structure, you will see that price action appeared to transition into a double bottom structure after failing to break through the $75 area for the second time. And with that scenario in mind, we had a neckline for this reversal pattern where we were waiting for the breakout retest of the neckline to validate this reversal setup. And look at what we had here. We saw price breakout structure, and it appears price has come back to retest this level. And since the retest, we have been noticing some buy pressure in the last 8 hours. Now, in this regard, will this be a platform, a new platform for another wave of bullish momentum? Well, we are going to scale down into the 1 hour time frame to see how market participants are actually reacting to the $76 area, as this will be giving us an insight into how we are going to be managing our positions for today. Now, in that regard, we'll scale down into the 1 hour time frame, where we can see price is currently trading around a range at this point in time. Now, if we take a closer look and zoom into that $76 area, you will see that since the early hours of today during the Asian session, we saw price has been oscillating or confined, let me use that word, between the $76.50 level and the $76 area, which emphasize the level of uncertainty at this point in time. And of course, you know how we use our flag channels in this community, especially when we start seeing indecisive phase such as this. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, in addition to this range where price is confined within, is the fact that in the last 2 days, price action has been on a bearish momentum. And if we connect the series of lower highs here, we have a beautiful descending trend line that we will be using to guide our trading decisions for today. And of course, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we feel comfortable in a sell position. But if price at any point in time breaks out or breaches the descending trend line, then this will be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, if you look at what has been going on here in the last 2 to 3 hours, you could see that it appears that price action has broken out of that descending trend line for the first time in the last 36 hours. Now, with the breakout of that trend line, it appears price is breaking out of the resistance line of that range again at the $76.50 level, though we can't say the breakout of the resistance line is valid at this point in time, as the current candle still has about 30 minutes for it to close. Not until this candle close can we truly say that we already have a breakout of the $76.50 level. However, for me, I already had a buy stop order which has been triggered above the $76.50 level. Of course, you know why I did that, because we are profitable so far this week, so I can still afford to leverage on the profit we had. So right now on the USOIL spot, we will be maintaining a bullish bias anywhere above the $76.50 level. So if we are buying right now, anywhere above the $76.50 area seems much reasonable to buy the USOIL spot. And if price continues to climb, we have the $76.75 level, we have the $77.50 area, we also have the $78 area, all of which breakout retest of the structures will be welcoming more buy positions. Now, in as much as we're buying here, please note that you do want to have your stop losses in place. Very, very important. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. Now, with the situation we have here, it will be very, very reasonable to have your stop loss right below the support line, which is just right below the descending trend line here, which will be dovetailing to between 50 to 55 pips thereabout for this buy position. And one thing we also want to consider here is the likelihood of price action coming back to retest the structure in anticipation of an uptrend move. So let's ensure that we have enough breathing space for price action to move around on this bullish momentum. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to capture the potentials the sellers also have. Of course, in the last 24-36 hours, it has been more of a bearish momentum, and we don't know if this momentum has finally ended. Now, if we are going to be considering selling the US oil spot today, what is it that we want to see on this chart that will make us feel comfortable and confident to negate the idea of buying? Now, if I want to sell, I would rather want to see price breakdown, retest the $76 area before jumping into a sell position. A breakdown of the $76 area would, one, have broken down the lowest point of price action for this week, and secondly, it will be back within the seller's territory, which is just right below the descending trend line. So let's see how the market will play out from this point. Current structure, our center of focus for today is basically between the $76.50 level and the $76 area, where depending on the direction of the breakout here will give us a clue into where price is likely going for today. So I encourage you to mark out these levels on your chart, as you will be needing them as a guiding light for your independent trading decisions during the New York session today. So if you have any questions whatsoever as regards to my current setup or my explanations, feel free to let me know in the comment section.